let's be honest, you know PepsiCo. I mean, whether it's a can of Pepsi, a bag of Doritos, or a bottle of Gatorade, their stuff is absolutely everywhere. But behind those brands we all know is a global titan that's really at a major turning point. So today we're going to look past the snack aisle and really break down the investment case for PepsiCo and what its future might actually hold. Here's how we're going to break it all down. First, we'll get a handle on the sheer scale of this company. Then we'll get into the bull case, why investors absolutely love it, and, of course, the bear case, all the headwinds it's facing. After that, we'll check out how they're planning to fight back, and finally, we'll wrap it up with the central dilemma every potential investor has to answer for themselves right now. Okay, so first things first. To even begin to understand the investment case here, you just have to appreciate the incredible scale of this operation. Let's put some numbers on the board to see just how massive PepsiCo really is. To put this into perspective, the company pulled in nearly $92 billion in revenue in 2024. I mean, that is just a staggering figure. It really speaks to its incredible reach and, the daily presence its products have in all of our lives. And its power really comes from this dual empire it's built. See, PepsiCo isn't just a beverage company that happens to sell some snacks. No, it's a symbiotic machine. The combination of market-leading snacks and drinks makes it an absolutely indispensable partner for retailers everywhere, from the biggest superstores right down to your local corner shop. So that brings us to the bull case, the argument for why PepsiCo is such a rock-solid investment. It really all comes down to its powerful competitive advantages, or what investors like to call moats, the things that protect it from all the competition out there. PepsiCo's fortress is protected by these three really deep moats. First, you've got iconic brand loyalty. Second, unmatched scale, which is powered by a secret weapon, its direct store delivery system. Frito-Lay's own employees stock the shelves. Think about that. It guarantees perfect placement and basically shuts out competitors. And third, that powerful snack and drink synergy we talked about, it just makes them essential. Now here's where it gets really interesting. Where does the money actually come from? Well, while the company name is Pepsi, the real profit engine is Frito-Lay North America. The snack division alone generates a massive 43% of the company's operating profit. It's the cash cow that fuels the entire enterprise. It's that simple. And for any income-focused investors out there, this right here is the crucial point. PepsiCo is a dividend aristocrat. That's a super rare club of companies that has not just paid, but has increased its dividend for over 50 years in a row. It's just a testament to the stability and the sheer cash-generating power of this business. But it's not all smooth sailing, not by a long shot. So now let's flip the coin and look at the bear case, because this giant is facing some very, very real pressures that could seriously threaten its future growth. The thing is, these headwinds are coming from all sides. You've got consumers who are actively turning away from sugary drinks and salty snacks. You've got governments threatening new taxes. Its core North American market is stagnating. And now, to top it all off, a very prominent activist investor is publicly demanding some big changes. In this slide right here, wow, it just illustrates the problem perfectly. While the international business is still a growth engine, cranking out a healthy 6% organic growth, the core North American market has basically hit a wall. Trying to offset this slowdown right here at home, that is now the company's single biggest challenge. So how is PepsiCo fighting back? Well, the company isn't just sitting still and hoping for the best. It has a pretty clear plan to pivot the entire business toward a whole new kind of growth. At the heart of its strategy is this framework they call Pep+. So what does that mean? Well, the goal is to become faster by getting closer to what consumers want, stronger by using tech to get way more efficient, and better by building sustainability right into the business model to reduce those long-term risks. And this framework isn't just corporate speak on a PowerPoint slide. You can see it in their actions. They are literally buying their way into new growth. I mean, just look at these recent moves, acquiring Siete Foods for grain-free snacks, Poppi to get in on the prebiotic soda craze, and strengthening their partnership with the energy drink maker Celsius. This is a crystal clear strategic shift toward healthier, faster-growing categories. So all of this brings us to the investor's dilemma. On one hand, you have a powerful, profitable fortress. On the other, a legacy giant facing some really serious headwinds. So how does the market value this whole situation? Well, if we look at a key valuation metric, EV to EBITDA, you can see that PepsiCo trades at a pretty significant discount to its main rivals, Coca-Cola and Mondelez. In fact, its valuation multiple is sitting at a 5-year low, which kind of suggests that a lot of the market's worries about slowing growth, well, they might already be priced into the stock. And here's the payoff for that lower valuation. PepsiCo is offering a dividend yield of around 4%. That's a full percentage point higher than its peers. So for investors who are looking for income, this makes the stock look particularly attractive right now. Essentially, you're getting paid more to wait and see if their big strategic pivot actually works. So here's the bottom line. PepsiCo's entire future really depends on its ability to solve this strategic trilemma. It has to defend the massive profits from its legacy brands like Pepsi and Lay's, while at the same time successfully pivoting to these new, healthier growth categories and expanding internationally to make up for the slowdown at home. It's a huge juggling act. Ultimately, it all comes down to this one question. Do you see a stable fortress with unbeatable brands just throwing off reliable income for investors? Or do you see a legacy giant trying to turn a massive ship in the face of some seriously choppy consumer tides? The answer to that question, well, that's the key to the entire investment case for PepsiCo today.